We have the Taiwanese index, which is up around 1.3%.
So FY25 guidance they had given in their PPT, assuming that, these restrictions will be lifted.
You need to essentially break above the swing high of 22,783 on the way up.
And in terms of guidance, they expect the domestic business to grow 10 to 11%.
So 22,770 is where we are at, and 75,000 on the Sensex.
By the way, in 1 month, the Chinese market has massively beaten the Indian market.
Retail will immediately start operating as a new vertical for Covoge at almost $100 million USD per annum.
Markets are subdued. The benchmark indices are trading with a cut of close to about 0.25%. The slew of Bajaj Auto's launches continue, and now the much-awaited NS400 launch, the Pulsar NS400 launch.
In a matter of 2 months or so, this bid process and the final buyer will be decided in this particular deal process.
The markets, they've come off sharply from the highs. And the slide continues in the market. Sensex is down 1,000 points. The Nifty is below 22,400. That's been the day so far. We started off in the green, but then the downward descent in the market continues. You're watching Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me, Surabhi Upadhyay and Nigel Dsouza. And guys, now week to date, the Nifty is turned in the red with the kind of fall we've seen.
Well, indeed, and there's no really any place to hide, because you have a lot of large cap names. You have Reliance Industries that's under pressure. You have the Nifty Bank as well that's under pressure. So there's no real place to hide. And just take a look at the crisscross lines. Now, that'll tell you the story. At the start of trade, you had 2,000 stocks that are advancing. That's come down to around 650 stocks odd. So I don't know what the street is fearing, or is it just routine profit taking? We've got a big US jobs report that comes out later today. But the Fed commentary was more or less acceptable, and that's why we see that global markets are fairly stable. But we have come in for profit taking today. We outperformed, mind you, in the month of April. The Nifty did much better than global markets, so maybe just returning back to mean. Surabhi?
That's the last point. I think that's the only point that's making sense to me, because otherwise I've been trying to find reasons behind this fall. It's really uncanny, this fall. You will not find global reasons. Yes, there is a jobs report out today, but that's not really, disturbed too many global markets. A lot of European markets are holding out positive. And of course, Wall Street had a good day. The futures, even now, they're holding up quite nice and steady, about 0.5% up on each of the indices, depending on which one you're looking at. So this is not global in nature. There is no new, event or big news trigger that we can attribute this to immediately. But it just seems, what Nigel said right at the end, that maybe as we are running into election season full throttle, and we're looking at, of course, some of the additional data points to come out from the US as well. Maybe this is just doing some of the outperformance that the Indian market enjoyed over the course of the last 1 month or so. And also, we were discussing this deep internal discussion on what's causing the market fall. The consensus is Prashant is missing. Maybe that could be one additional reason. But no, and it's really large cap led, guys. And that's what I'm saying, that you can't ignore it. I mean, for large stocks like Reliance to fall 3%, L&T to be down 3% or so. Also, perhaps, this is conjuncture at this point in time, that the earnings season maybe has not inspired too much confidence of too many sort of, upgrades coming in or re-ratings coming in. Earnings have largely met expectations, or they've been in line, or in some cases mildly disappointing. But whatever it is, this is an afternoon where profits are getting taken off. The Nifty is fighting very hard around the 20 DMA. Let's see if it can sustain it or not. But the mid-cap screen also looking at a fair amount of losses right now.
Okay, let's invite our experts then to find out how you should trade in the last 1 hour. Mitessh, Thakkar and Rahul Sharma, Director and Head of Technical and Derivatives at JM Financial. Both of them are there with us. Mitessh, first, go for, tell us what you made of the day so far. Any reasons, what's causing this kind of a decline that we've seen, and the trade?
I don't think I can attribute a reason, but I think it looks like a pure bout of profit booking. I think it's only the intraday charts which have been damaged a bit. The rest is pretty okay. We are still above the 10-20 day averages for both the Nifty just floating around with the 21 day exponential average. But the bank Nifty is comfortably placed above it. So it doesn't look like a start of a big move on the downside. But yes, there is some profit booking, which means that there could be a phase of consolidation. Now, working out the lower levels of this range, I think in the worst case scenario, I'm penciling in that we could go down to as low as about 22,180, 200 zones, which was where the gap happened last Monday. And on the upside now, 22,750, 780 becomes a very clear-cut defined supply pivot. So I think, it could be a 500-point kind of a range. It's slightly early to say, but looking at the indicators, that looks like to be the more probable outcome. Having said that, on the stock side, I have one buy and one sell. Bharat Forge is coming down to support area, so that's a buy. Keep a stop here about below about levels of 1230. Look for targets around 1285, 1290 on a bounce back. And JSW Steel is turning negative on the short-term chart, so some more profit booking can happen. So sell here with a stop at 870 for targets of 840.
Okay, got that, Mitessh. Thanks a lot for that. Well, let's get in Rahul Sharma as well, who's in charge of derivatives and tracks it very closely at JM Financial. Hi, Rahul. Good afternoon. Good to see you in, Rahul. I'll tell you what, the evidence that we have seen in the last 18 months or so is that you like a FI net short market. They're going overboard on the long side. And this market is devoid of short positions. If there were shorts in the system, we would see some kind of a bounce from lower levels. But now, we are falling purely on the cash market selling. Your view?
Yes, absolutely, Nigel. You've hit the nail on the head. One thing that is definitely not comforting is the India VIX going above the 15 mark. Secondly, last 7 days of whatever activity that we had in the Nifty has been taken down in just one trading session today. So the speed at which Nifty has corrected is definitely alarming. At the same time, because there are probably not enough shorts into the system, especially from the FIs, the short covering is not happening. Now, technically speaking, there is a cluster of support for the Nifty. The 50-day moving average is around the 22,200 mark. 22,000 has been like a very solid base in the previous month. We expect it to continue as well. So we feel the correction could be shallow. In terms of points, it may look very big because, mind you, we are at a 22,000+ kind of an index, and we are just 1% down from day on day. So my sense is the corrections could be shallow, but India VIX sustaining above 15 would mean that such kind of moves where Nifty goes up and down by 200 points in a day or two is something that could be a norm. And secondly, just wait for a follow-up round of selling to properly, sort of gauge this kind of a move. Because in the past also we've seen Nifty seeing profit booking and immediately next day some kind of a bounce back comes in. So we'd rather wait for a Monday to see a round of follow-up selling happening in case the view needs to be changed.
Fair enough. Yeah, that is true most of the time. These kind of cool-offs have been very, very shallow. Mitessh, just on the large caps, because it's that kind of a day when a lot of names are under pressure. Like I was, pointing out earlier as well, there's a L&T, there's a Bharti Airtel, there's a Reliance, a couple of others as well, ITC. For the very short term, would you want to initiate any shorts over here on any of the major blue chip names?
See, I think as I said, I picked up JSW Steel as one of the stocks which has declined. So I think, yes, there could be some indicative shorts. In fact, I'm waiting for Reliance to break below 28.30 odd levels. If you look at the recent price movement, Surabhi, we had a 28.36 as the low on the 15th of March, closing on the 15th of March. And if we start breaking below that important pivot low, then I think you might see another 70-80 rupees kind of a decline happening. So it's not a big move, but yes, from a trading point of view, Reliance is something on my radar. If it breaks 28.30, maybe I'll have a sell call.
Okay. All right. Gentlemen, just stay on. We have more questions for you, but we also will analyze some stocks and some of the fundamental news flow that we've got along the way. MRF has been reacting to